All right, my beautiful people. If you guys saw what happened Friday and you were on the stream, you saw there was a crazy play with Boeing. I'm going to go over all the trades I made on Friday. Here you could see my account history on there. And I want to share the Boeing play with you, but highlight something about trading weekly options. Now, I'm going to tell you the best time, and it's like a weekly option trading strategy, I guess is you could call it, but identifying the factors. Weekly options are risky, you guys. You got to understand that, and you have to know when the odds are in your favor. And now I talked about it literally the day before. I'm going to show you guys a clip from the watch list. So make sure you guys are subscribed. I'm going to be posting these nightly watch lists for you guys to get an idea. And then we're live trading. So you guys saw me do this live. You guys didn't see this account, but you heard me talking about it. And here you go. So you see I wasn't bluffing with it, but you could see kind of the strategy that I employed with it. And it's pretty interesting. And there is some other plays, like I did Facebook. I did another 1,000% on the Facebook. You could see that, but I'm going to highlight the Boeing play. Now, too, as always, you guys, please drop a thumbs up on the video if this is the content you want to see. It lets me know, but also YouTube. A lot of people are surprised that this channel exists, that I'm showing all this stuff that we're trading live. So if you like it, it's making sure it gets recommended more of the content that suits your needs, and then also so that we could spread the cult. But let's get to it. First, I want to tell you guys what it is. It's a very simple thing, and it has to do with the option chain. So here's the clip from the video. I'll show you guys. You could see. Here's the clip. I'm going to play it.
You know, just below, it goes up and then comes right back down. So I'm expecting some time frames, to give this thing some time. However, don't underestimate what we could see on the short term. And again, the option chain is the same as Roku. That was the blessing even for Facebook. I called it out on stream today right before. I said it looks like the digestion, and I went and I bought more puts, and I held the puts I didn't sell that I ended up becoming, I almost was down on them. They were 30%, and I kept saying it's the better time now. But you guys should like this. This should be whetting your appetite on any of the contracts if you get to see puts and calls are both down, because that means the volatility, both sides are getting cheaper, but that also means expectations are changing. When you see a cheap contract, it's not cheap for no reason. Again, everything happens for a reason. So then NVIDIA.
So there you go. And you see, I went to the option chain, and I'm going to highlight that again for you guys because it provided something favorable. And I said, even in the video, that video was posted the day before this happened. And I said the same thing with Facebook. And you even see I sold 2 of those Facebooks for $1.50. I bought those for $20 each, sold them for $150. So here you guys see that Boeing 362 March, and I bought it for 35 cents or $35 if you guys are new to options. And then where did I sell it? Sold it 12/11 later that day for $750. That same 377.50. Now, this is what I was saying. I'm going to go to an option chain. I said it literally should be whetting your appetite when you see calls and puts are both negative. This is the dollar change close. That means, so when it says $1.87 positive, this contract was $1.87 more expensive than what it was yesterday, versus negative 122 would be down 122, right? Oh, I'm giving you guys that recap, but this is how a normal change should look. Stock went up a lot, the puts are down, the calls are up. That's pretty normal. But see, there's no more weeklies. Even the next weeks, it started to move. But what we saw on Thursday and Friday is that both days, for a good period of time, you got to see that it was a negative change close on both calls and puts. So that just means they were getting cheaper and cheaper. The volatility was going down. And that's what happened here with Boeing, that it was good. And I'm going to show you how I played it, because I did do a straddle. And this is something I highlighted. I wasn't spending that much money. That wasn't my intention with this play. I wanted to control it because I was just, hey, it's a Friday. And that's what you got to realize. These dailies, I said it in that last video too. If you buy a daily contract, right? Let's say we're fast forwarding. Today's March 22nd, let's say, and we're going to play this. If you buy this contract at 392, the stock has to end at 392 or you lose. If it doesn't end at 3, even if it goes to 392, if you paid $3 for this contract, you need the stock at 395 on Friday for you to break even. So you will lose. That's understanding how much you're paying for the contract. But let's go through and see what I did on here, so you guys could even get an idea of really the whole day. So right in the morning, within 3 minutes, we could go to Facebook. I sold out of those. So we'll come back. I'll make another video on this. And then I bought a Roku 1 minute later, spent $48 on the March 22nd. And notice I got a week because that's what I was highlighting on Roku as well too. It had the same favorability. I just wasn't too confident in Roku doing it for one day. So I said, hey, we'll give it next week, especially if it, considering the move it's had. And I've been documenting that in the watch list videos. And then what? 10 minutes later, I sold another one of these Facebooks for $1.81. And then you guys could see within 2 minutes later, what did I do? I went and I wanted to buy 5 of these. I canceled it. And then I put in my order and I got 5. I rolled over. So these expired. So I said, hey, 5 times 16, that's like what? $86 or something like that. So I already cashed out what? $481 right here. And I stuck $86 back into another weekly put on Facebook. And then 3 minutes later at 9:50. So I want you guys to take a look now because this is where it gets good of understanding how I played this. Where's 9:50? 950, it starts to drop a little bit off of that first drop. And what do? I buy first a Boeing call. Where is it? Oh no, put, excuse me. I bought that Boeing put just in case. I didn't get the call yet. I bought that after it was dropping. So this one, it was $35, and I understand why I bought it. It was cheaper because literally, even though after it started making these moves, it ripped up the puts on that theta on that Friday. It was depreciating so much that even though I bought it during a downtrend, 35 was still cheaper than before. So I bought that at 950, and well, I lost on that. So I lost $35, and then I got a Tesla. That one, Tesla. See, and the Tesla kept screwing me. That's why I won't put more than $20 on Tesla. But then here's what happened. It's going down 5 minutes later. It drops a little more. It's kind of near this low. So I'm figuring, okay, it's going low, seeing how the market was interacting. And again, the call was pretty favorable. I could have got it cheaper, but I bought that Boeing for 35 cents. And why I said I could have got it cheaper, it did go down to $10, but even then, it wasn't really that good of a play at $10. And again, I was fine because either way, at this point, if I put in $35 on that one and 21, I was $50 in. That's my lunch at Cheesecake Factory, and then that's it. I was gonna let it ride for the rest of the day, and it did its thing, and I didn't have to do anything up until that. And you guys see even the Facebooks, I ended up selling 2 more. Remember, I just bought those when I rolled over for 16 cents. I bought 5 of them, and then I sold 2 for 47 cents. And then I bought some Microsofts that I sold those Microsofts I had, and then I went and bought these for 2. I have so many more plays on there. And then again, you see those 162s. I bought those for how much? 16 cents. I ended up actually selling one for $1.05 now. But pretty much 12.11 now. And I did make a play on this account with it. You guys saw me when I saw the run up and I chased it. I went for 30 cents on that. You guys could watch the live stream. I'll post a clip actually of that in another video. But I got one and I chickened out on that one. But when did I sell out? 12.11. So literally, I think that's exactly when I sold out. 12.11 right at the top. So there's 2 reasons why and how I picked that sell point. I didn't use technicals. I didn't do anything. It was seeing, I guess you could say it was the resistance point that it did break was 381 or 382. But seeing how the contracts, usually I like to see if we're getting how the volatility increases. I actually went on my Tastyworks account. I showed, this is all on stream, so I'm trying to give you guys the quick version. But what I ended up doing was looking at what was making the contracts go up and down, both puts and calls. That's the same reasoning that drew me to this play. And from there, I started to say, okay, it was at a top, and I sold one. I bought the first one for $50, and I paid too much for it. So here's the next level of that strategy because I paid so much for it. It went up to like $1. It came back down. I sold it for $80. I only made $30. It was a 382, and I could have made like 300. Shout out to guys who kept it on stream. But that was my logic. I said, well, I could make 30, $40 back on a different play, make the total cost basis back on this play. And then now I said, I'll just hold it until, it gets to a favorable level. But after it went to 384, I was seeing the option the extrinsic value wasn't coming up that much. And after the drops, after these 2 drops and any of the little drops, I started to see it, get pretty squashed. I tried to sell at 850. I couldn't. I think I settled at 750, but at the end of the day, that was the highest point I would have got for that contract. So it was a pretty good sale. But as you could see, that's how it was. So now you've seen the play. Let me talk about the realistic aspect of this. This is very risky, and it was a fun week. We've hit I did a couple 1,000% plays. Those Microsoft, I bought these for 2 cents. When do I sell them? I sold them for 27 cents. So that's a big gain. That's like 3,000%. The Facebooks, I bought them for 18 cents, sold them for $1.60. There's a lot that happened with that, but it's understanding what the market was providing. And I talked about it in the watch list, so make sure you guys are on there. But it's both the pricing and the timing. Now, here's the next thing, because even if you have the pricing and the timing, I'm pretty good at the timing, I'd say. I'm pretty good at the pricing, but you guys have to understand fiscal management. Now, this is such a risky strategy. The odds of any of these hitting are literally less than 1%. Did we hit something statistically impossible? Yes, we did. Does it mean it doesn't happen? No. But it means that on a long scale, if you were to chart this and continuously try this strategy out, you will lose 9 out of 10 times. So that's why I'm trying to let you guys know, any of these weeklies you guys see me buying, even this whole day, it's a Friday. The options were presented there. It was a quad witching. There was a lot of things working. It's about aiming small. Now, at the same time, if these didn't hit, these would have added up, $80 on Facebook, $50 on Boeing. I spent like $12, $15 on Microsoft, $20 on Tesla. Even that right there, that's at least $200-$300. So at the end of the day, you need a pretty big account. Even if you had $1,000 in an account, that's 30% of your account betting on stuff that expires on this day. I wouldn't take that. If you guys did want to play this, if you're, you could do 20, $50, but you shouldn't be trying to get more than one play. You shouldn't do this a lot. And realistically, this isn't going to happen. If some of you try this next Friday and stocks aren't moving, I said it in this video too, you really need a specific scenario, because if the market moves like this the day before, even on a Friday, which is very, very typical, and you see the market not move a lot, you're going to be screwed. We just got blessed because the market didn't move much, but individual names were going, and then this was Boeing off of the news. And now here's the final kicker. People saw me chasing this, and I chased it, and it worked. I got in before, but the second time I chased it, it still would have worked. I chickened out, and why did I chicken out? I was just like some of you guys. You're like, should I cut losses? What should I take profits? It's because I ended up paying way too much money. Even though it ended up at a $3 contract, it was still too expensive to pay for that at the time. And that's why until it made the real big move it needed, it was too risky to hold. And I said I would hold this one because when I bought the second one, I was already up 1,000%. I said, even if that comes down, I'll be cool taking, 500%, 300%. But you have to understand overpaying and now the velocity. Why did I chase this? It was news. Even though it was fake, who cares what kind of news it was? It shot up. It made this move, but look at that velocity. It was $10 in 3 minutes. That is what you want, because if it doesn't move like that, there's no play. Same thing, even Google. I ended up playing that over the weekend, and I'm going to play it, but you see crazy velocity. These are what you want on Fridays. You need real volatility, because then people were asking me, and they saw Facebook going up around the same time. They're like, oh, if you did it on Facebook, all the weeklies, you got screwed. I got lucky because what? I played it here. I played it off the gap, the day before. If you were on the stream, you saw me. I was talking. I talked about the puts I got. It dropped. I sold off in the morning. I rolled over right here. It went down more and I sold. And then if you bought calls here, you would have made money by here. But even then, this was like what, $4? Maybe you would have made money. That was good velocity though. But anything after this, you would have lost on the weekly option. So you need to understand when this is favorable. Come to the stream. We'll go over it. It takes time, and be prepared to be wrong. And if you know this is risky and you're going to be wrong, you should put $10, $20 and be smart with it. My sweet spot is about $30. I like contracts at around $30 to $40. That's usually something you can balance pretty good. And then you have to factor the asset itself. Facebook is going to move differently than Boeing, and they're going to have different implied volatilities, all those different factors. But that's pretty much it. I'll leave it for you guys there. Let me know what you think, who played this. If you guys want me to make videos on the Microsoft play in the Facebook, I could do that as well too. Let me know, but I feel bad I need to highlight some more losses here before I could talk about some gains, but you'll see my other video. I'm talking about that. But I love you guys. Again, drop a like on the video, subscribe, ask a question. Feel free to criticize, do whatever you need to do. I will see you on stream, youtube.com/thestockmarket, Monday morning, 30 minutes before open. All right, bye.